Alright, what's going on, y'all? So last time when I did the video, um, I was here, so talking about different candles and how you could use them to your benefit. So now we're gonna go into patterns and like support and resistance and trend. Kind of give you a general like complete one go in this video. So basically we on the 1 hour time frame. Before we talked about we had two candles, the red and the green. Now we're going to get into the pattern that these candles could form. So right here, we could have these two candles right here, bullish, the bullish on the left and the bearish on the right. This will be formed resistance for these two candles and where it's located in structure. Right here, you could say these two right here, and with bearish, the bearish being on the left and the bullish being on the right. These two candles could form support. Hold on, let me get a better one. It's right here. Put it a different color. Boom. That's resistance. We could use that's resistance, and then we could use these two right here. Nah, it's too close. I use these two. These two right here. These are this pattern right here from support with the bearish on the left and the bullish on the right. All right. So with that, with support and with the candles could form patterns, making them support or resistance. You could always find support at a low. And you could always find resistance at a high. So as you're going in the markets, I suggest you mark stuff off. That's the biggest thing. Marking stuff off to help you, because it could help you either like later down, like say you woke up and you in New York session, maybe in Asia in London session, or maybe in like Asia or the Aussie, maybe the price may retrace back to there or even bounce off of there. So mark stuff off when you see them. That's one of my biggest tips. Um, this is my main chart, by the way. I should have cleared this, but I had the markup from when I did the first video here, so I just was like, let me just start from here. So let's get into a little bit of structure. So now that we know that the pattern that could form support or resistance, um, I like to just when I come to the market, I just like to just mark either where I'm at and then go see where price goes. So a lot of structure could be on different time frames, but you have to identify which one like works with you. Uh it's not really like one time frame gonna make you a whole ton of money. Nah, it's how your eyes adjust to certain things. Because some people could trade the 1 minute, some people could trade the 5 minutes, some people could trade all different types of time frames. So some people even use the full hour, the daily. So it's where you see structure the best. So in this video currently, in these videos we only be going over the 1 hour time frame. So right now in this case in point, we're using the structure, we're basing structure off the 1 hour, right? So now we know the pattern that makes support, and now we know the pattern that makes resistance. So let's get into a little bit of structure. So I'm gonna draw it out first, and then we're gonna go into like we're gonna go into oop, too much. We're gonna go into like trend, and we're gonna go to the candles. All right, so boom, boom, boom. Could do another one. Mm, 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 mm. So these are the basic trends. We got an uptrend, downtrend, consolidation. All right, consolidation just means price is moving sideways, and depending on the pair, sometimes consolidate. You might be like you could take trades, like you could take trades during consolidation based on some pairs, but you most majority of the times you want to be in these. You want to be in an uptrend or a downtrend. So remember the pattern we talked about. You could find support on market green. You could find support at these areas in an uptrend. All right. In a downtrend, you could find resistance at these areas. In consolidation, you find support in these areas. Uh, in consolidation, you can find resistance at these points. All right. So let's get into it. So in an uptrend, you have a low, a high, then you have the formation of a higher low, higher high, higher low, higher high. Right. In a downtrend, you have a high, you have a low, you have a lower high, then you have a lower low, lower high, lower low. Consolidation, you just have a low, a high, low, a high, low, a high, low. Just going back and forth. So when it comes to just locating the patterns and just identifying where you are, that's where that's where a lot of the that's where a lot of the patience come in, because sometimes you have to wait for confirmation for a higher low to form or a lower high to form. You gotta wait for these things to form to give you the confirmation. Okay, yo, price is going bearish, so it's gonna start a downtrend. Oh, price is going to meet a higher low, or it's gonna start doing an uptrend. All right, so let's get into it. Let's look to a basic uptrend in the 1 hour time frame. All right, so examples of this is be like this. Got a higher low here. Um, Not high. Oh, you have it already marked here. So this would be this little uptrend right here. Boom, push back, push, and higher low, and push again. Right. So this would be like an uptrend. In a downtrend now, you find the resistance right here. Right. And this is what this look like. Got a high, got a low, got a lower high. Oh, I'll kind of skip this one. Let me do that again. So you got a low, got a high, got a lower high. Wait, what the hell did I just say? Bugging. Do it again. We got a high, we got a low, we got a lower high, lower low. Got a this would just be considered as a lower high, but it's kind of closer. It's a little bit lower. So you're gonna go lower high, lower low, and then you can just skip this. Lower high, lower low. Alright. So as you can see, it's kind of forming out, like seeing structure. So you have mean structure and you have major structure in my eyes. Like sometimes you have things like this, and but it's just, is the mini structure is just the market giving you signs. Like okay, I might decide to go a little. I might go a little lower today, right? Based on this, because this are in my eyes, this is already lower than the previous high. So I'm already looking and say, okay, we going bearish. So this could be the first sign that price could go bearish and start the downtrend. So when it did this and made this high, even this high even lower than the previous one, I'm definitely might be looking to start taking sells. And then if you could use tools such as like trend lines to try to plot and try to give you a help to your analysis. And try a perfect example of consolidation would be right here. This was this week on gold, and hey man, let me just move this real quick. Basically, that I was using the trend line to see if price would break above, but it didn't. So we gonna look here. So remember, I was talking about signs of price making that transition, right? So we have resistance here, we have resistance here, and then we have a whole bunch of resistance. And then we have look, we have support. We have support here, support here, support. You can find support here. But so this whole entire time right here, price is just consolidating until it decides to break. So let me see if I could get a nice little area throughout this point. So if you can have a nice little medium terms point. I'm gonna go there. So these are like when prices like choppy like this, sometimes it's hard for me to really get a grasp of what the market is trying to do. So sometimes I'll just stay out of the market completely and just wait, be patient, not trying to give away all your money. But the first sign here was like when price made the low, then price made a lower high. This is a little too close. Like remember minor structure. This is the first signs. So boom, it made this low, and then it made this. This is for sure a lower high. This is lower than this one. So I'm like, you'll see where it could potentially start going bearish, and then could use the trend lines to try to plot and find like a nice. It gotta have a nice little angle for me to be like, okay, yeah, it looks good. But areas like these are just stay out the market, bro. So I'm not saying you can't, because there's sometimes you have some pairs that they consolidate for a long time, but they have a nice little range you could take advantage of. Like if it's consolidating for like 200 pips, like hey man, take advantage, take advantage of that. 200 pips is a lot. Even if it's 200 pips from the bottom, and then it's going back up 200 pips, and then it's dropping again 200 pips. Hey man, take advantage. Even if you catching only 50 on each, you know. So it's just how you decide to trade. So those are a little spill on that, a little structure, and then we could go further into detail, like into different parts of the market. Like let's go further back, and this is what I normally do. Like if I like chart time is the biggest thing, because with chart time you're training your eyes. So even when you watch these videos, you're just going to chart and just mark off the things that you saw in the video, and that's just training your eyes to realize, okay, boom, this is a resistance right here. Boom, resistance. All right, this is support right here. Oh shit, wait, this support is higher than here. It's higher than this one. This could potentially start an uptrend. So you got a high, well, you got a low, you got a high, you got a higher low because it's higher than the previous one. Let's go. Bullish. Alright, so look at here. You marked off this resistance, and then you see price made a low. Then you see price made somewhat of a low right here, but it's lower than the previous one. It's lower than the previous one. Mark it off. Mark it off. Right? So this potentially whole area is a low. So let's say low. This is a low. Well, this is a high, and this is a lower high. So let's look for that bearish move. So and then there's different tools you could use to advantage. There's fibs. There's a lot of things, but for me, I mostly just use structure is the main thing, and then I'll plot like a trend line or a random line to kind of judge where price, kind of gauge where price may go, and just kind of help my eyes, because at the end of the day, your biggest thing is training your eyes to see certain things. There's a reason why the the big players of on Instagram and all of them, they've been in the years for they've been in the game for years. So you're seeing like how much their eyes have adjusted after doing this for so long. So don't just see them think that, oh, they didn't put in the time, they just got rich overnight. Nah, they had to sit here at the computer just like me and you and go through the whole thing, years upon years upon years. So the only difference is with a job, you're working for somebody. And you probably can't stay at the job for 24 hours. But if you're on your time and you're at home, you could put in a lot of time on the charts. So that's the only difference. How much time are you willing to put into something to see the reward? Some people go to college for 4 years. So to me, I feel like don't compare yourself to anybody. Keep your head down for 4 years and see what happens. But I would advise getting a mentor, getting a mentor so they could shorten that learning curve, or they could help you to know the little basic things. And then after a while, your eyes is going to start to adjust when you start putting the time in. And that's when you see the whole shift of when you might develop your own style of trading. So let's go into a little bit of structure here, and then I'm going to go into like trades you could take. All right, so in an uptrend, when I would look for trades is if I see these, I if I see um higher lows. This is when I'm looking for trades. Higher lows. In a downtrend, when I would look for trades, I would look for trades around this area. When lower highs are forming, that's when I'm looking to take trades. And it's simple. I'm placing my trades, putting a buy here, and I'm gonna put my stop loss to a reasonable amount. Risk management is your own. That's gonna. I feel like over time you're gonna realize what you're comfortable with losing. So I feel like that's another thing too that comes with experience. Your mentor can't tell you you're comfortable seeing negative X. That's something you got to develop on your own. Or they could give you a guide like what they do to try to give you a help. But I feel like after a time, everybody gonna start to they develop their own type of risk management, because I feel like with experience you could get confident and really start, having a decent one that you're comfortable with, and you're seeing accounts grow like exponentially. So definitely this is all experience based. The more experience you have in the market, the better you are. So let me do this again. Uh, right there. So these are the trades that I'm taking. See, when it comes to these, you kind of like, you kind of shooting yourself in the foot, because you could take the sell here, but you got to get out as soon as it hit that support again. So you gotta really, I don't really try to take trades in consolidation. I just walk away, keep my money going. So you could take the trades, like if you taking a buy, you taking it back to resistance. If you taking a sell, you taking it back to support. So but for me, these are the trades I look for, right? So let's get into structure, and then I'll show you a couple ideas of what I would do, or how I would perceive the market. So let's say I came to the market and the market was here, right? I would immediately mark off what I see. I see these two candles right here that could be some form of resistance, right? You do have a low, um, it's a previous support right here, right? So if there is price to come lower, okay, you see what happens. So I would either say came back to the market the next day and I see this, I'm marking a trend line off, like a random line, to try to see, what happens next. So I know this is support, and then I'll see price push up, made a high. All right, now we cooking. Now we cooking. We made a new high here. If price stays above here, um, I would normally pull out a fib and try to see how much this is in the retracement, and then you know make my judgment based on there. You could get like a mini resistance throughout this point, so this justified this being a new high. Go right there. So remember, you, the 1 hour, 4 hour daily, and all of those all time frames could be broken down. So except when you go to the 1 minute, yeah, the 1 minute could break that down too. You could go to seconds. So definitely, it's what time frame you like. You see structure the cleanest is what my best advice to you is when you come into this. Don't try to hop around. Don't try to well, you could change time frame and try to see, to verify what you're seeing is it really happening. Or you could just, I would say, start from the higher time frames before going down. Because with experience you're gonna understand more about the market. So to take advantage of the lower time frames. But in just beginner beginner stuff, I would say just stick to the higher time frame so everything is just nice and thick and it's solid. And then when you gain more experience, then you could drop time frame and start to really develop to really get them, entries that you're in before any crazy thing happened. So um yeah, so I would just mark these off as I'm coming in the market. And the moment I see this support here higher than this one, all right, I'm looking for buys. So I would just look for an entry candle, and then that I would just take the buy here. But you could just take, see this is higher than this one. I would take, say my entries are normally like 8 a.m. Yeah, I had to miss that. This is a Friday though. I try not to stay in the markets on Friday because the market closes. So I wake up at 8, so probably here. So I put my, it was whatever risk you're comfortable with losing, I would say put there, and you're aiming for a higher high. But this is not the best trade ever. But this is a Friday, but sometimes you gotta be, or you could have, I could have entered on Sunday when the market opened. I do that sometimes. Sunday at 9 o'clock, definitely be looking, and I put my risks. I'll probably put it under this candle, maybe. I want to, yeah. Just, I don't want not this 2K to make 5K potentially. You could use previous structure. You could use previous structure for take profits. But as I said, I use fibs. So, alright, so that could be one trade right there. Um, Here, I would mark off this resistance, right, and this support. The moment price prints this and it's seen that it's lower. What day is this? This is Wednesday at 10. Mm, Probably in the morning. Like probably Wednesday. Yeah, Thursday morning, like 9 o'clock. Yep, I would have took this. So seeing that price broke under the support created this new lower low. I'm looking for some type of resistance form here, which you can see here, and I'll probably enter on this candle. If not this candle, yeah, I'll probably enter on this candle and then put my stops above. Again, go into, make sure that's there. Go on to two there, and then put my TP um, entry there. You can see you could either close out here. How this candle close? I'd probably close for sure. Or you could have even just let it rock. To be honest, is what you're comfortable with. Cause this would be 1 to 3 would be 60. Boom. So you could have took profit. I, Based on how this candle looking, like if I'm actively in the markets here, and this is third. I entered at Thursday 11 p.m. I would definitely be looking at the market before I go to sleep, which is like 10, 11. So based on this candle and how it's looking, may have would have just closed out for a 1 to 2, or I just let it round, let my stop loss be in, and just hold it out, and then get the 1 to 3, which is 60. But that's just what I would do. But I'd probably look for a scaling entry here too. But that just comes with time, because this form another resistance and it is lower. So that's it. You see the angle on this trend line? I already know. I'd extend it out and just see. As long as it doesn't break above, straight. Um, so this kind of did like this. If you really in tune with it, lower high, lower low, came back. As long as it doesn't break there, we still good. And he even went lower. So that's a downtrend. See that uptrend right here. So you see how price had this resistance here, and then we had that support here. As long as price created this resistance, and then I see this here. This is another Friday. Oh my God, this is Friday at 8 p.m. It's 8 a.m. on Friday. Damn, I probably would have took it. I'm not sure. 8 a.m. is when I'm up to, so probably put the stops like under here, and then aim for that 1 to 3, maybe 60. Does it hit before? Nah, it hits on Sunday. That's sticky. That's sticky. That's sticky. All right, so the things like Friday, right? And this comes with experience. Say if you make money Monday, Tuesday, Wednesday, it's kind of hard to take the chance on Friday. But if you have good risk management, sometimes it's good to just take the money and walk away. But if you have good risk management, you could potentially just take your profits on Thursday and just leave Friday alone. Cause you be having Freaky Fridays, believe me. You be having Freaky Fridays on this chart. All right. So we did a little bit of how I would take trades. Or we did the sales, did a buy here. I already told you about this. Would be the perfect entry, but this is 3 o'clock on Friday. I'm not sure I would even be entertaining that. But here, this was Thursday, into Friday. This is a good trade. I would take this. The stop loss is a little tight, just because I'll try to keep my stops, like, I'm very key on that, because you gotta control how much money you're losing. So I would just use a lower lot size here, and then when price pull back, and I see, like, even I'll probably close here and then re-entry here, or I could just hold it and just get this entry and then take it again. So there's two ways like this trade could have went for me. Um, but as you can see, it turned into even a bigger monster if you really think about it. You get what I'm saying? So it's just how you really wanna trade, really, and what you're comfortable with losing. That's another thing, but that comes with experience. So let's get into some trades that I actually did take, so y'all can see. So here I was looking at this as, we had resistance here, price pushed up, made a high, made a higher low. So this support right here, boom, and I took the buy here. Right, this I do a lot of technicals, as you see. I have random line, on my trend line was broken. So on this trade right here, I was just looking for this to maintain. Support was formed here. So on my entry candle, took it again, and that was that trade. These yellow boxes here are projections based on my fibs. So that's what happened there. This is a trade I missed out on. I saw the lower high point here, and I saw the low here. So this is a low, this is a lower high, based on this being a high. Right, and created a lower low down here. That was that nice bearish move, but I missed it. So then price pushed up. This is a resistance right here, broke. This is an example of my fib. Resistance, high, pullback, created a support right here, higher, and took that. I think what do I hear? Probably took the sell, then I took the buy, but I didn't hold the buy, so that's where I messed up. So that's a little that's a little video for today. We went over a lot. We went over patterns. We went over where we started. We started here. Went over patterns with resistance. What forms resistance, which is uh bullish candle on the left and a bearish candle on the right. We went over what forms support, which was a where was it? Where was it? That's what I get right here. With a bearish candle on the left and a bullish candle on the right, form support. So yeah, and then we went over uptrend, downtrend, consolidation, where I would take trades, which is at the higher low points in uptrends, where I would take trades in a downtrend at which is at lower high points in a downtrend. So yeah, consolidation, I'd stay away from the markets. This is a nice video for y'all. Hopefully y'all learn something, get a little bit of insight, and keep trading. Don't give up. You will get there.